Hello and welcome to FinextraTV. I'm Hannah Wallace and we're here at Money2020 in Las Vegas. With me now is Bhavin Turakhia, CEO and founder of Zeta, and we're talking about the next generation of credit cards. Bhavin, thank you very much for taking the time to speak with us.
Thank you so much for having me here. Pleasure meeting you, Hannah. This is fantastic.
Really good to have you on, and thanks for taking the time out of the busy event and talking about a really interesting topic, one that's going to be at the heart of loads of discussions during Money 2020, and that's the next generation of credit cards. But to begin with, could you set us and bring us up to date and tell us, how have you seen the evolution of credit cards so far, and what are some of the characteristics you're seeing in the next generation?
To your question, I'd say, what evolution, actually? So the first ever credit card, I think, was Bank America card that was put out in 1958, so it's been 65 years. They set out sort of 60,000 cards in California and started the revolution. Today there's about 5,000 plus credit card programs in the country, more than 600 million credit cards that have been in circulation. The truth is, if I take my wallet and take out a card that I use today, it looks no different, almost acts no different from the card that was launched 65 years ago. Yeah. And so in many ways, really, fundamentally, card processing, credit cards haven't changed a lot in more than the last actually 6 decades. We at Zeta, we've launched a next-gen card processing platform. We really think that fundamentally there's a few characteristics we believe are relevant and important for the next generation of credit cards. First one, we talk about hyper-personalization. So today, if you think about any apps that you open up, right? I mean, if I open up Netflix or Facebook or Twitter or Instagram or whatever on each of our phones, they're going to look completely different because the experience that you see, even though it's the same platform, the same foundation, the experience that you see is completely different from the experience that I see. Financial services is not the case. The only distinction between all credit card programs is interest rates and reward points. And fundamentally, if the two of us had the same card from the same bank, we would get 100% identical experience. Consumers today are expecting, by virtue of using all these digital apps, they're expecting that experiences be personalized for them. And so we truly believe the next generation of credit cards will leverage hyper-personalization, will offer truly beautiful digital experiences. Fundamentally, again, credit cards haven't changed from a digital standpoint. They're still the same digital experience that consumers have, because the underlying legacy platforms don't enable new age digital functionality. So there's some really beautiful digital experiences that are possible with today's technology. I mean, most of the stacks that power these hundreds of millions of credit cards were created before smartphones existed, before the cloud existed. So they don't leverage the latest in modern technology that's available to them to actually provide some beautiful digital experiences. So we believe next-gen cards should provide for that. And then I strongly believe in this whole notion of democratizing banking. Banks, if you think about it, banking as a service, it was always something that, it's kind of like, the analogy that I can draw is kind of like water, right? Back in the early days, in ancient times, water is something that you went to, right? You went to a lake or a river or a well, you filled water, you brought it back to your home. Today, we take water for granted. It's embedded in our lives. It comes to us where we need it, in the form of a shower or a tap or bottled water, if you will, and we just take it for granted. Banking kind of started off that way and remained that way for a really long time, where you'd go to a bank, you have a teller, you go to an ATM, you withdraw cash. But now, this new sort of digital era, it's all about embedding banking contextually. We talk about sort of democratizing it and making payments invisible, because really you want to embed financial services in the context of where a consumer needs them, such that it's completely transparent and visible to them. And you want to democratize banking, democratize credit cards and experience, where consumers truly have the control over their financial services, their financial destiny, their ability to sort of manage whether it's risk, whether it's fraud, whether it's card controls, whether it's family expenses. Truly democratize banking, put the power in the hands of the consumer.
So that's really interesting. Thanks for bringing us up to date, and it's a positive start as well. So how is this next generation of credit cards helping the financial institutions compete with consumer trends such as buy now, pay later? What about that?
So I have a really interesting take on BNPL. There's much like any other industry, there's always these fads that appear in every single industry, right? Technically, credit card was the first and still continues to be a buy now, pay later instrument because you use it today and you make a payment, a month and a half later or 6 months later, depending on how much the balance you want to revolve. So technically, buy now, pay later has always existed. It's just a slightly new incarnation where instead of having the flexibility to revolve at will, you're choosing to opt for sort of the more, I guess, the convenience of fixed known installments, I guess, in some sense, right? It's a combination of what used to be personal installment loans along with sort of a line of credit at purchase. And now with merchant integration, it becomes even more richer because you have the ability to have merchants sort of subsidize part or all of the interest. You have kind of the way I was talking about embedded finance, which is that you have the ability to leverage credit at the time you need it, at the point of purchase. We think that in many ways, modern integrated credit card stack, like with Zeta, we have 2 modules we call Ruby and Emerald that provide an integrated credit card and buy now, pay later experience. And what that essentially means is that consumers can have a single credit line that's given by their bank or their financial institution. They can use it like a regular revolving credit card, but they can choose at the time of purchase, either before purchase, during purchase, or after purchase, to convert a specific portion of their balance or a specific transaction into an installment loan. Thereby, you get the convenience of a single statement, a single credit line that you can use in whatever flexible manner, as a revolving line or as a buy now, pay later line, essentially getting the best of both worlds. And choose at the time of purchase. So a modern platform, a next-gen platform will allow consumers to either convert transactions into buy now, pay later loans, or create virtual cards that can be used such that transactions on that virtual card still borrow from the same credit line, but every transaction performed on those cards will automatically get converted into a 6-month or a 12-month loan. And so it's kind of an integrated product experience for consumers and financial institutions. Now, they don't have to, you don't have multiple lines of reporting to the bureau. They don't have to underwrite you multiple times each time you're trying to make a purchase. They've already underwritten you for a certain amount, substantially more kind of convenient experience. So that's how we think a next-gen stack should truly enable, well, I guess, as I said, credit cards will already be NPL, just enable this additional functionality of being able to convert transactions into installment loans.
All right, so you've highlighted some of the opportunities there, but often paired with the opportunities have become some challenges as well. So what are some of the challenges you're seeing those banks face when trying to provide this next generation of credit cards? What about that?
So I keep saying this to institutions we meet, that I'm surprised that we're having a conversation in 2022, even now, where hundreds of millions of cards and processing still takes place on mainframes, green screens, and COBOL-based platforms. By the way, most of which, actually all of which, were built before I was born, before you were born. And so it's the biggest encumbrance. It's not that financial institutions, I speak to some of the digital transformation folks there, product managers there. It's not that they lack imagination. It's just that they're encumbered by the legacy stacks they work with. The analogy that I tend to offer is, you can try as hard as you want. You can't take parts of a feature phone and try to build a smartphone from them. If you want to build a smartphone, which is what consumers want today, you have to rethink ground up. The chip, the operating system, everything has to change ground up. You can't use that legacy tech stack. You can't take parts that we used to build a Nokia and suddenly build an Apple iPhone from that, right? And that's what, unfortunately, most of these legacy, mostly banks are encumbered with. They're encumbered with these legacy stacks, and they're trying to do this sort of what do you call it? A kind of hackish incremental innovation approach where you try to make, it's almost like trying to take a Toyota and convert it into a Tesla. But you have to build one ground up. You can't paste the skin on top and suddenly starts acting like a modern vehicle. And so it's really, most of them are challenged by the fact that existing legacy card processing platforms don't have adequate API coverage, don't have real-time events. They still talk about batch processing in 2022. They're not cloud native. They're not microservices architecture based. They're not open. They're not extensible. Typical innovation cycles on them. It takes averagely now, I think some reports that I read, it takes more than 21.6 months for a bank to, on an average, to launch a new product. This is not agile software as we know it, with constant innovation, et cetera. So we strongly believe that there's a huge shift taking place in literally the last 12 to 18 months, where banks are now exploring the possibility of moving out of legacy platforms into modern next-gen card processing platforms that will enable agility, speed, more rapid innovation, being able to respond to the market, being able to provide hyper-personalization, custom experiences, etc.
So how should they be going around doing that and meeting these challenges then? And also I'd like to hear a bit more about where you come in as Zeta.
Absolutely. So with Zeta, I co-founded Zeta in 2015. It's been about 7 years, and we probably, I guess in some ways, are the only processing stack that's been written ground up in the last 7 years, less than a decade. Fully cloud native, fully microservices architecture based, 100% API and events coverage, embeddable banking ready, supporting sort of hyper-personalization, truly modern experiences, etc. And it really leveraging modern technology. And so the way we see sort of banks being able to leverage a platform like ours, so for instance, hyper-personalization, right? Today, if you look at any of the legacy stacks, when you configure a product, let's say you're a mid-sized, large-sized US bank, you configure a credit card product, all your policies, your interest policies, your fee policies, your reward programs, your notifications, your transaction policies, card risk policies, card controls, these are all set at the product level. And now if you enroll 2 million customers in this product, they're all going to see the exact same experience because the policies are set at the product level. Zeta is the first platform, Zeta Tachyon is what we call it, where you can set policies and settings and programs, not just at the product level, but you can attach them per consumer or customer segment, per account, per card, and even per transaction. You can actually create interesting scenarios like, I mean, not that this might be of any relevance to sort of most institutions, but just to sort of elaborate on the capability of the platform, you could literally create programs like, I'm going to charge lesser interest for all spends made on Wednesdays between 6 p.m. to 9 p.m. at this particular store. So you have the luxury as a bank to be able to create dynamic policies where experience of one customer is going to be completely different from the experience of another because of the nature of transactions they engage in, the merchants that they shop at, the location they're based in, their past behavior, their current behavior. Things that you take for granted, by the way, today in any app that you download, including the smallest of video games, like the experience that you'll have is going to end up being different from the experience that I have. So things that you take for granted are not available in these legacy stacks. But we have this, what we call a hyper-personalization policy engine that enables you to personalize these policies and programs, as I said, all the way down to on a per transaction basis. We come by default built in with some really unique digital experiences like dynamic CVV and dynamic PIN that significantly enhance customer comfort because of the enhanced security that they provide on transactions. We come with a ready-made family hub experience where you can manage sort of expenses of your family. You can give like a pocket money card to your child. So as an issuer, you can provide all these capabilities to your customers where they can then monitor the expense of their child. They can block merchants. They can turn off the card at 9 p.m. every night because they don't want their child spending money late night, etc. So there's some beautiful digital experiences you can build on top of our platform. And then we're fully embeddable banking ready. We've got a really interesting construct in our platform where as a financial institution, we've got this notion of what we call a virtual bank operator. So as a financial institution, you can create hundreds of VBOs under your bank, and you can then partner with each VBO is like a mini charter. You can partner with a Kroger's or a Target or an Amazon or it could be a co-brand partner or an agent bank or a fintech that can then distribute products, use that VBO to access APIs and embed distribution of your products and services inside their merchant interfaces or their apps or whatever have you. And so all of these combined, hyper-personalization policy engine, ready-made digital experiences, embeddable banking ready, along with sort of 100% API and event coverage, enable you as a bank to provide a modern experience to your customers, a personalized experience to your customers, and launch products way more quicker. Sometimes in the order of we've seen institutions configure products on our platform in the order of days versus what would conventionally take them months or years to launch.
Well, it's really interesting to hear what you're doing at Zeta, and there's no doubt we're entering, already have entered a world of hyper-personalization. So watch this space, it's safe to say, and I think we've done some good advice there as well as meeting these challenges from the banks. But Bhavin, thank you very much for sharing your insights. I'll let you get back to the event. Thank you.
Thank you so much. Thank you for having me here. Pleasure meeting you, Anna.